You're listening to the Rent Roll Radio Show with Sterling Chapman. Hey, Rent Roll Radio listeners, welcome back to the show. Today, we're being joined by John Brackett. He's the CEO and founder of Fidelity Business Partners, Inc. John founded Fidelity Business Partners in 2008, and their purpose is to build great apartment communities to improve how people live. I actually was lucky enough to be interviewed on John's podcast a few weeks ago. I was just so impressed with him as a businessman and as a person all around that I really couldn't wait to get him on my show. So, John, thank you so much for joining us today.
Man, the pleasure is absolutely all mine. We had a great discussion when you were on, and it was actually a great show. So if anyone's listening, for those of you that are, check out that podcast that I did with Sterling, because he shared some amazing insights.
Awesome. So, John, let us just get kicked off. Can you tell us kind of your backstory, how you got into real estate, what got you started, maybe what you did before, and what made you make that transition?
Yeah, no problem. I started off in commercial banking. Gosh, this was quite some time ago, probably now closer to maybe 15, 17 years ago. But I started off in commercial banking, financing commercial real estate. And in 2008, transitioned out of banking and decided to go all in, right? Because one of the things that I learned in banking was most of the customers that I served, and I was a business banker. I predominantly, my role was to essentially sell business customers into the bank, right? Move their deposits over, and also loans, right? Originate loans for the bank, commercial loans. Mm-hmm. So most of the customers that I work with, they generated between $1 million and $20 million in annual revenue. That was my target market. And so I started off doing that. Then I eventually, finished my role at that bank. And this was at one of the larger Fortune 50 banks, and finished off as an area manager. And one of the big things that I noticed there is that all the very wealthy business customers that I work with, almost 100% of their wealth came from real estate. Back then, they don't do this now, but we got a lot of training. So we used to underwrite loans. They taught us how to underwrite loans, right? So then it's a little different. You go out and package a loan now and you ship it off to a centralized underwriting department, probably somewhere in Iowa. But back then, we actually got trained on how to sit with a client, ask for their tax returns, their financial statements, and literally we called it spreading a loan right there, right? So I could sit down with an owner and say, okay, yeah, we can do this loan. This roughly will be the amount. Okay, and it will take roughly X amount of time. And, we were able to do that then. So it was a great skill set that I acquired, because in apartment building, same thing, right? We're looking at financial statements. You have to understand how to read a balance sheet. You have to understand how to read an income statement. And there's a lot of value that you see inside of that as long as you understand what you're looking for. So that's how I got into this business. In 2008, when the market tanked, I told my wife, I said, hey, look, we have to be all in this market, because this is going to be a once-in-a-lifetime opportunity where we're going to get to buy assets in a market, at these kind of prices, right? So that's how I started. We started buying single-family residential properties, even though we had commercial backgrounds. My wife was a commercial real estate appraiser for about 10 years. And so, we both understood the opportunity. Real estate was our background, so we're very comfortable in it. And we just started buying. We started buying at that time. The best opportunity available to us was single-family residential homes. So we started flipping a lot of properties, probably over the course of maybe, I don't know, I want to say 5 or 6 years. We flipped almost 100 properties. We built some pretty good cash to then transition back into commercial real estate and start buying properties to hold.
What a power couple for a real estate investment group, where you have your commercial banking experience combined with her commercial appraising experience. I bet that was an invaluable asset going into this business.
It really was. It was very helpful. But at the end of the day, you really learn by doing, right? Sure. You learn by doing. But I do really believe that there were some things that gave me an advantage when I was looking at deals and putting structures together that I think really favored the project and made the project a lot more profitable. So yeah, it was really helpful. And then Debbie, my wife, extraordinarily smart lady, and very grateful for her. We've been married for 23 years, right? We have 3 kids.
Congratulations.
So a very, very smart lady, and her feedback and input and insight. Now I can say that was invaluable. She just has a very unique perspective very unique way of looking at things. And I think the combination is what really helped propel us forward.
Well, so I have two comments. One is your commercial banking experience. I can speak to how incredibly valuable that is because my business partner in the syndication arm of my business, the reason I chose to work with him is he does exactly what you just described as his day job. He's a commercial banker, and he's underwritten about $700 million in commercial loans, many of them being apartment complex, self-storage facilities, mobile home parks. So the skill set that he brings to the team is just, unmatched. I don't know how many years and years it would take me to learn all of the things that he does for the group. So definitely see the value in that. And the other thing I have to say about your wife's contribution, it sounds like it was invaluable. But another thing I would note is how awesome to have your partners buy in to your real estate aspirations. So one thing we hear a lot with aspiring real estate investors is, how do I get my wife or my husband involved? They don't want to do it, but I want to do it. So it sounds like the fact that she had already had that exposure to the industry and was already sold on the concept and the dream just made it that much easier for her to support you. And that just means so much when you're operating as a team unit pushing forward.
Yeah, that's really a great point. What's really interesting is when I was in commercial banking, my first motivation was to be a bank president, right?
I tell that story all the time. I'm in telecom. I still have a W-2 job. And for years and years, my aspirations were to be the president of that company. And at some point along the way, I read Rich Dad, Poor Dad, started kind of learning about passive and financial independence. And all of a sudden, I had no desire at all to move up in the corporate world for somebody else.
Right. So it's really interesting because I come from a very entrepreneurial background. My father, my mom, 8th grade education. My dad is the academic, right? But I always say that my mom has a master's degree in life. They both have very different skill sets, but I'm grateful for them both because they both have allowed me to live in both extremes, right?
Sure.
And I've learned that there's no negative. One extreme doesn't create more advantage than the other. It's how you combine the two. And so I'm very grateful for them both because in my world, I deal with extremely wealthy people. And I also have to deal in day-to-day, everyday life with just the various people that I interact with and manage. And so both skill sets, I've learned to, because I was raised in that environment, right? I grew up on the South Pacific where the median income, man, was $2,000 a year.
South Pacific, where exactly are you from?
It's a small island called Ponape, which is southeast of Guam.
Okay.
But it's not the median, it's the per capita income rather. Okay, is even till today, it's $2,000 a year. When I was growing up, they didn't have a minimum wage. They called it a standard wage and it was 35 cents an hour. Today, I'm not, and that was probably when I was 5 years old. I'm not 5 anymore. Today, it's $1.25. Can you imagine?
True.
Yeah. So, it's really given me a lot of perspective, but I think one of the big advantages that has come from that is just learning how to see opportunity everywhere, right? Because that background, working with my dad who really influenced or pushed me towards education, and my mom, her influence was just, look, when it's all said and done, don't be a smart dummy. You still have to learn how to go out there and do things, right? You still have to learn how to apply what you're learning. And if you're not applying what you're learning, then you're wasting what you're learning. And she was extraordinary with people, man. So I'm grateful for both styles of being, right? They're just very different people, but they complemented each other, and I learned a lot from them. Very grateful.
Awesome. And where do you live today?
Today I live in San Diego in California, in this community called Carlsbad, kind of a beach community.
Where do you invest?
I invest in different states. So I like San Diego because, San Diego, there's a shortage of product here in San Diego, especially with multifamily product. Because of that, though, the price is a little bit steeper than in other areas, low cap rates, but there's always opportunities. So in San Diego right now, one of the things that we're doing because of the shortage of supply, and I think there's just better value, is we're building, right? We're finding product to reposition and we're building. So for example, building out a 6-unit apartment building near Cal State San Marcos. I've owned that land for quite some time, and I think now is a great time to do it. And then we're also working through the planning process on 100 units near downtown San Diego. So some unique opportunities there, and have a couple of those in my pipeline in various stages. But everything outside of San Diego, we buy product that's already built out, usually value add, C, B product, right, in CB neighborhoods, usually in the path of progress, but there's some value add component to them. It's either deferred maintenance or, they're being undermanaged, usually a combination of both. And, fortunately, we were doing a lot of construction, right? Flipping, then we're doing ground up construction and small subdivisions. So we have really strong construction backgrounds. And that's really played into our ability to be able to, I think, value opportunities a little bit differently than most people pursuing traditional investments. We love multifamily, but I also love office and I also love industrial product when it makes sense, right? And so I've learned to look for opportunity.
How do you feel about office in this current environment? Because it seems as if the last year has taught us a thing or two possibly about the demand for office going forward.
Well, I think it depends on the market that you're in. I think because right now vacancy is on the rise with office buildings, right? I'm not telling you anything you don't know or our listeners or audience that they don't already know. It's pretty commonly discussed today. Okay. Sure. So, I'm a big believer in that you have to go in the opposite direction of the masses. Okay. If the masses are taking a right, I take a hard left.
Zig what everybody else is zagging.
That's where the opportunity is. So I think there's tremendous opportunity in office, that asset class. Again, it's just a matter of creating clarity around where we need to spend our time to find an acquisition or an investment that makes sense for us. So that's how we're approaching that. But the time and energy that I'm committing to that is not as great as some of the other asset classes like multifamily, right? I mean, that's where we're spending most of our time, energy, and resources. But there will be, I think, some great opportunities to be purchased in that particular class of investment, right? Which is office space.
Got it. So we haven't had anybody on the show who's really elaborated too much on industrial, but it seems like industrial is definitely not going anywhere anytime soon. Can you break down for us what you look for in an industrial space type opportunity?
Well, I mean, I don't buy a lot of industrial product. That's really not my area of specialty, but I can share some thoughts on it if that's what you're asking me. So really interesting. I was on a call the other day just trying to get a better sense for how things are evolving, right? Between all asset classes or the primary asset classes, office, retail, industrial, and then of course, multifamily. Inside of that, you have some subsets such as self-storage and mobile home parks. I didn't really touch on that, but I think having a really healthy understanding of what's happening on a macro level makes you smarter at investing on a micro level, right?
Sure.
So I think one of the reasons why industrial product has held up so well as an investment is because in markets that are thriving, okay, and in markets that are soft like this, in this case, a little bit different because it's driven by a pandemic or a health issue, a lot of that space is being used for distribution. Okay. So for example, if you think about an industrial product or an industrial space versus office space, an office has a very limited use, right? It's us coming in, working out of that particular space. Usually that space is very specific to that operation, which makes it less marketable if that company had to move out, right?
Sure.
Because typically someone's moving into a space for very specific needs, especially a business. Industrial space, on the other hand, technically is just a box that's empty, right? And that business is going in and they're using that space predominantly to either build something, okay, or to store and ship, to store and transport, right? Or to sell and transport. But usually that space, a component of that is being used for storage, right? Or to build. And so the office component within that is relatively small compared to the other component of that space, right? Maybe it's 15% office, the majority for either building and selling product or storing and transferring product. So consequently, industrial space is just more marketable. It has more uses,
Sure.
Okay. Which is why in this market, it's been a lot more stable. If you think about the Amazons of the world, right now, online retailers and grocery stores and food distributors having the best probably sales cycle of their entire being, right? Existence.
Yeah.
Okay. And online retailers, they're going to continue to start adopting more buyers because of what's going on right now. The adoption rate is higher. And you can imagine in Amazon, right? They're selling online, but a lot of their product, even when you buy, they're selling their own product. Well, all that product has to get stored somewhere. Okay. That's industrial space that's storing all that product. Does that make sense? Absolutely. And it has to get distributed from somewhere. Okay, all that product is being distributed from industrial space, warehousing, or warehouses, if you will. The office component relative to that space is very small. So you can it's more marketable because you have more uses for that space.
My major concern about office, and not office as a subset of an industrial project, but just strictly office, working in telecom, I've made a living for years selling people on technology that can allow for remote workers. And since the pandemic hit, it's been like busiest time of my life because all of these companies had to transition to pretty much all remote workers for several months. And a majority of those companies they're sticking with it. They said, you know what, we decided, we learned from the pandemic that, we're actually fine with 70% of our employees working from home. What do you think the long-term demand for office space, how do you think it'll be affected by that?
I think there's for sure going to be some impact. Okay. And so the way that I look at it, man, is I try to simplify this stuff, right? Because oftentimes, one of the great things about this country that we live in is everybody has an opinion. Okay. If we didn't, there'd be no opportunity. So competing opinions create a market, right? Okay. Competing opinions create a market. In other words, we don't really get to know who's right until about 5 years later once we prove out our thesis, right?
Right.
And that's the beauty of the United States is competing opinions create a market. Okay. The idea is who's willing to step behind their theory or their thesis. Okay. So with that being said, I think that there's always going to be opportunity. It's just a matter of just being diligent and being willing to stand behind, and take action on your thesis, right? What your assumptions are. And so I like that for those reasons. Okay. Now let me say this. Okay. Where's the opportunity? All right. So again, I love going in the opposite direction of the masses. So industrial product, very stable. Okay. I'm not going to be spending much time there because I don't think there's any margin there at this point. Sure. Because that product is still in demand and it's performing fairly well. Retail space, a lot of vacancy there right now, and there's going to continue to be. Same thing for office. But let's talk about the reasons for that, okay? Let's talk about the reasons for that. Okay, so what most people don't realize is history is a great teacher of what we can expect on a relative basis going forward, right? So let's look at the last two recessions, okay? In the 1990s, late 1990s, and in 2008, 2009, okay? It took roughly 24 months to work through those recessions on average. Okay. And that was some data that I looked at different places, but also that was published by Cushman and Wakefield, their analysts. And they of course extrapolated that from a couple of different sources. And so that was pretty consistent with what I was seeing, right? So, okay, that means we can reasonably assume that going through this downturn right now is going to take us at least 24 months to come out of it, meaning we're back on a growth trajectory, right? Sure. We can assume that, right, on a reasonable basis. Now, let's talk about jobs, okay? So jobs, from 2008 to 2020, January of, okay, it took us 10 years to create 10 million jobs. 10 years, okay, 10 years. Okay, now, at the height of the pandemic, I think it was in March, April maybe, okay, we had roughly 50 million people that applied for unemployment. 50 million. And in this country, we have roughly 320 million people that live here, right?
Sure.
And it was likely higher than that. So I think now we're down to 30 million that are unemployed, maybe a little bit more than that now. So you have to ask yourself, is it reasonable to assume, okay, that we're going to be able to create 30 million jobs, man, in a couple of months? Right. When it took us 10 years to build 10 million jobs? it's just unrealistic. It's not going to happen. Not to mention that this time around, my feeling is 25% of the jobs lost in this market are not coming back. Okay, most of them retail, a lot of them small business. They're just not going to come back. Not going to come back. So those jobs being eliminated, right? We have 30 million people unemployed. It took us 10 years to build 10 million jobs. Okay, we're not going to do that in 1 month. We're not going to do that in a year. And we're definitely not going to do that in 2 years. Okay, so that should give you some impact that still hasn't been accounted for as we go forward, right? So the question now becomes, okay, how do you spend your time, energy, and money to find these opportunities? There's going to be opportunity in retail. There's going to be opportunity in office. And there's definitely going to be opportunity in multifamily for those reasons.
Sure, absolutely. So let's switch gears a little bit. I think so far we focused more on the macro picture. Can we go into the micro a little bit? Can you highlight your biggest win, your favorite deal, your biggest home run? And then after that, maybe detail one for us that was a crash and burn, something that didn't go as planned. And
geez, I have a lot of
highs and lows. Give us a high.
Yeah, so I want to start with the low. I'm going to start with the low first. This is my most expensive seminar, I call it.
Nice.
Greatest learning lesson. I actually have a couple of these. So one of them was what I call my first $1 million mistake, right? I had an 8-unit apartment in escrow here in San Diego. I had it in escrow for $700,000. Had some foundational issues that the seller wasn't disclosing. They didn't want to let me in the building. And I knew there was something wrong, but I also knew that, hey, it was a great price. I could see the building was leaning a little bit. At the time, we were kind of coming through the 2008 recession, so banks were freaking slow as molasses, man, to get deals financed. I went to a traditional bank. They were comfortable with me because I had good credit, I had assets, I had cash, but they took freaking forever to get that deal funded. So finally, when they were ready to fund, okay, the seller passed away.
Oh, wow.
Okay, seller passed. When he passed, it just created a huge mess with his estate. Okay, the estate didn't want to sell anymore. And, I had some very close friends that were my partners in that deal, and they were coming in as 50% owners. I was taking the other 50%. And I sold half of that away to them because they were with me when I started, right? Okay, in 2008, man, they were betting on this guy, John Brackett, when no one else would. So I said, hey, guys, here is a massive bonus. Okay, we're all going to do really well with this deal. Okay, once we stabilize it, it may take 2-3 years to fix all these issues and get this property stabilized, but we should make close to about $800,000, $900,000 on this deal. Okay, in a very low vacancy market. Even back then, vacancy was 2-3%. So the issue was the state no longer wanted to sell. They're threatening litigation. And I was like, look, for the amount of time that it's going to take to freaking litigate this, I can go and find 3-4 other deals and replicate this kind of wealth, right? I mean, that's just how I think. It's like,
Sure.
I got everybody on the phone. I said, okay, here's the issue. These folks don't want to sell. We can sue for specific performance, and I have everything documented extraordinarily well. Seller even has already signed off on the deed. It's in escrow. I mean, I have this thing so well documented. The likelihood of us winning, I feel, is pretty high, right? And I already ran everything by an attorney. But, what I think and actually what takes place, okay, of course, very different, right?
Sure.
Because if we move this forward, I knew I really had a strong feeling that we were not going to settle. Okay, this would actually go to either an arbitrator and we'd get a decision. Okay, so everybody decided I wanted to still move forward. Okay, but then I go, you know what? Let me take this to my partners. They said, hey, John, we don't want to litigate. This is just not a good use of time, money. Okay, it would have cost us about $100,000, but there was upside in that deal. So everybody was like, well, we should think about it, but the decision was no. So I said, okay, great. So we canceled escrow and we moved on. But the lesson there that I learned from that, and I never made this mistake again, okay, is don't waste time squabbling over pennies, okay, when you have massive upside, right? I could have closed that deal much faster with more expensive, financing. I could have closed that deal in 2 weeks. Sure. Instead, went to a slow bank in a market where banks were afraid of their own shadow, and they had to cross every single T and dot every single I because of what was happening, and the regulators were very, everything just got very heavily regulated, right? So it's just a very painful process. So the biggest lesson there was, and I call that my first $1 million mistake, is don't squabble over pennies, man, when you have huge upside that you can capture, right?
I was pretty confident that I had learned that lesson a long time ago, trying to nickel and dime somebody, losing a phenomenal deal, and I swore I would never do that again. And then I actually lost another deal yesterday trying to nickel and dime someone. So,
Don't do it, man.
I lost 50 grand trying to save 5. So I definitely hear you and needed to hear that story. So
yeah, I never made that mistake again, man. I constantly remind myself. In fact, I still have the PPM on that deal, and I put it up for probably about 2 years right in front of me just to remind myself, don't squabble over pennies, man. Not when you have huge upside. That was a really good lesson. Fortunately, it happened early on in my career, so I was able to use that learning experience and create other opportunity from that, right? So that was one. The second, this is my most expensive seminar. So we were growing really, really fast. Probably had 8 projects going at one time, and had a project manager that was overseeing construction that, I hired this person to oversee this, and he had no business being in that role. He just did not have the experience, didn't have the confidence. And it wasn't his fault. It was really mine. It was a leadership issue. Okay. Sure. And that was a very, very expensive mistake. But I hired him. I thought I could develop this person over and above the experience that he already had, right? In that industry and construction, that was a very poor decision. And I ended up paying for it very dearly. So he was a younger person, and the contractors just ate him up, man. They had their way with him. They just had their way with him. And before I realized what was going on, I was looking at our matrix every single week, and I would talk to him. I'd say, hey, how's things coming along? I see that, right? We had a matrix that reported every single project. But the only way that those reports were accurate if they were being reported accurately from the field up, right?
Sure.
So we showed, say, for example, 50% progress on projects, and they were only 25%.
Mm-hmm.
Okay. And because of his inexperience, he didn't have the confidence to deal with the contractors or the experience.
Contractors can be brutal.
They can be very brutal, man. They can be very, very brutal. And so consequently, what was being reported and what was actually happening in the field, 2 different stories. So a couple months went by, and things were just not right. I mean, I go, man, this can't be right. This just cannot be right. So finally I went down and I drove all the projects, and man, nothing that was reported in our progress reports was mapping up to what I saw in the field. And I was out there all day walking every project, talking to every single contractor, every trade that was on site, looking at the project, looking at our sheets, figuring out, and on average, say we were reporting, 60% complete. Those projects are probably 20% complete with just things that were not done properly, right? So in that moment, when I got to the end of the day, I called up my teams, and I also, after that, I spoke to my wife and I said, hey, we have a big problem. Okay, we're in a position where we're likely going to lose about $2 million. And it's going to take us about 2 years to get through this, to be able to pay everybody back. And it's going to be very painful. But I said, I'll do it and we'll do it. But I just have to let you know that this is the reality of what we're going to have to deal with over the next 2 years. Okay, this is just the reality. So that's what we did, man. Called her up, and I remember sitting down on the beach, just thinking about what I had to do to get through this. Made a decision, and it took me 18 months to pay all that money back. Very painful process, but I paid it all back, about $2 million, managed that loss down to about $30,000 for us, and we moved forward. But massive lesson learned there. But the biggest takeaway there was, first of all, people, right? Leadership, you have to lead from the front, okay? As a leader, you got to lead from the front, man. You set the example as a leader, and you cannot rely, those days of speaking to one thing and then expecting someone else to do it without you setting the example, those days are over, right? That was the first thing. The second thing is, you have to hire the right people and put the right people in the right positions, okay? And experience does matter, okay? Sure. Depending on the role, especially in a job like construction, okay? In an industry like construction. It's just a very different industry, right? And so experience matters. That was really critical. Hiring the right people matters. Putting them in the right places matter. But also leading them is perhaps the most important thing. And the reality was that was a $2 million learning lesson. The third thing that I learned from that was just the value of resolve, right? There are a lot of things that I may not know, but one of the things that I do know is I will find a way to get to the finish line every single time. And that's why I believe that my partners and my investors have stayed with me for this long. And even in markets like this, they're still investing alongside of me for that reason. Every single investor that we had in those projects, they're still with us to this day. And so that was a very valuable lesson in that, that experience and that mistake built my capacity to take on larger projects, right? Okay, 100-unit projects. So now we're working through 100-unit development near downtown San Diego. And those experiences literally created inside of me the capacity to take on very large projects because I know I'll always find a way to the finish line. Those are the challenges.
So give us a home run real quick. Tell us a good story.
Well, I got a lot of those, fortunately, especially after some non-home runs, right? Let's see. I'll give you a small one and then I'll give you a really big one. Okay. I'm not going to go into the details on the big one because on that one, I have a confidentiality agreement in place. So I have to be really mindful of that. But I'll give you a really small one that just happened about 2 weeks ago. Closed on that one about 2 weeks ago. Okay. A big one and a small one. So the big one, I'm not going to mention units or anything like that. Okay. And I'm not going to mention location. The big one is a multifamily project. Okay. Property. It was a joint venture where that property was being underutilized and just had an extreme amount of deferred maintenance. And so, I reach out to sellers quite a bit, and I'm very specific about who I reached out to. The seller of this existing asset, they agreed to joint venture where they contributed the land. We came in with all the construction expertise, right? We improved it with all of our own money. We took on all that risk. Their contribution was the land and improvements. We worked through that project and there was some really huge upside for everybody. Very, very successful project, right? I mean, a couple $1 million in success, okay? And so that was a great opportunity. But what made that so special was the partnership that was created, okay, with all the parties involved. I find that the greatest opportunities, I think, moving forward as supply becomes more constrained and more limited because we're not manufacturing land, okay, are going to come from people who can think differently, okay, and solve problems, right? They had a problem that I was able to solve and they felt comfortable with the solution and how I mitigated their risk, which was the reason why they wanted to work with me over and above everyone else that was making presentations to them. And they did receive probably 2 other presentations outside of mine from much larger firms, much, much larger. But fortunately, they chose us and, we performed and the outcome was awesome. The second one, which is a small one, and I got into this conversation 2 days ago with a buddy of mine for a couple different reasons, but I'll explain, right? So just to give you the backdrop, I had a friend of mine who is an underwriter for a large real estate investment company, okay? And they're typically buying 200-unit projects, 300-unit projects, $20 million or so. And so we got into this discussion and I said, well, he was quantifying risk, right, in the form of an internal rate of return. And I said, well, that means something to you because you're the one raising capital, okay? And you're using that to present to investors. Now, take the investor out, okay? How would you look at that deal? How would you look at it differently? And he paused for a really long time, okay? Because when your own money's in a deal, you price it very differently, right?
Sure.
The considerations that you make are much different than if you're using someone else's. And that's why I really am a firm believer in that if you want to be really successful in this space, you have to start with your own money because it gives you a different level of discipline and a different level of respect, okay, for risk and how to quantify risk. Okay, so with that said, I said, okay, well, when you take that out, I said, well, how do you price your capital, right? How do you price your capital? How do you decide if you had 10 deals going on, which deal to invest in? Okay, assuming that, of course, every single opportunity is going to look a little differently, right? Mm-hmm. So how do you price your capital? Okay, how do you price it? And he used a very complicated matrix, okay? And I said, look, you're talking from the viewpoint of someone who's never put their own money behind something. And I said, I appreciate it, I get it. But let me explain to you how I do it, okay, and how we do it here as a company, because I don't have $1 billion balance sheet, okay? It makes things very different. I have to be selective about what I pursue, okay? And also what I put my investors or my partners, how they invest alongside of me, okay? And I go, for me, it's really simple, man. It's time, energy, and money in that order. When I look at deals, I make an assessment on things based on time, energy, and money. Therefore, it doesn't have to be a big deal. Okay, when I do find something that I think makes a lot of sense, then we buy. But, I'm more focused on profits and not size. Okay, sure. I don't want to be the guy that is at the party talking about I have 10,000 units, but the reason why I'm not talking about profits is because they're not all profitable, right?
Or what's really common in the syndication world is people will go brag about, I've got 10,000 units, but at the end of the day, they own 0.25% of those 10,000 units.
Perfect example. Perfect example, right? Perfect example. So I've learned to really focus on profits, okay? And the way that I prioritize that is time, energy, and money. So I gave him a really good example. And I said, man, this is a great example because I just closed on this about 2 weeks ago. And fortunately, when we were in escrow, the seller let us start working on the construction while we were in escrow, okay? Oh, wow. Major construction. All I did was I increased our general liability insurance.
I was about to say, isn't that a liability issue for them?
Yep. Added them on as loss payee.
Got it.
Okay. They were comfortable with that. So that was their concern, and I solved the problem, right? So they say, hey, John, if our concern is that something happens while we're in escrow, got the title company comfortable with it. Of course, they had their exclusions. I was comfortable with the exclusions. Because the contractors are folks that we've worked with for many, many years, right? Mm-hmm. And so bought several homes next to an apartment building that we already own, okay? And normally I would not buy that project. Why? Too small, and in theory, not very profitable, right? But after I started talking to the broker, he called me up, and the first seller was not able to perform because those properties were built in the 1920s, a lot of foundational issues. That happens to be one of our areas of specialty, right? Over the years, got really good at dealing with foundational issues. So I knew where the properties were because it's next to an apartment building that we own. The previous owner, I knew her, they knew me. The apartment project was probably 50 feet away from these homes. The apartments were, before we took them over, very problematic. Now, one of the shining gems in that community, right? And a great performer for us. So I already knew the market really well, okay? We already had management in place there, so very easy decision, right? Again, time, energy, and money. Not going to take a lot of time because we folded into an existing portfolio, okay? Not going to require a lot of energy, project small. So this is what the numbers looked like, okay? The way that we underwrote that deal and the way that we were able to buy it, even after all of our improvements, we netted, we're going to net about $30,000 a year free cash flow from that property, right? Mm-hmm. 3 homes, okay? 3 homes.
Wow.
Okay? All in aggregate on about 2.5 acres, okay? Right across from something that we already own. So the value creation from that is going to be about $500,000 net. And the beauty is I bought that 100% financing. Okay, technically 140% because I got a loan that included 100% of the improvements as well, right? Purchase price plus construction costs at 4% interest.
Oh, wow.
Okay, so when we get that done, I'm going to refinance that into a 30-year fixed rate product, right? Okay, in this market, single family, 30-year fixed, cheap. That was a big factor in me doing this. So think about this, right? Okay, we started construction on that project before we closed. So technically we're going to be done with this thing, have all of those homes completely renovated in 45 days. Have a team out there that I know really well, work with for 15 years, don't need to spend a lot of time with them create a scope of work that we've used repeatedly for probably the last 15 years. Okay, material list that we've used repeatedly for the last 15 years. And they go, and I know they're going to perform really well. I'll probably follow up with them once a week for 30 minutes. In today's market with technology, we use video. I can see exactly what's going on, and I know where progress is, right? Mm-hmm. So I'll spend maybe my time. I'm talking about my time, okay? Total of on that project, my time, 20 hours. 20 hours. My staff, W-2, a fraction of that, maybe 1/12 of a percent, W-2 person. Everything else is contract labor already built into the price with improvements, right? Sure. So time, energy, very little time. The money. In this case, okay, not my own, but work with a lender that I've worked with for 15 years. Okay, everything was done via email. They're able to fund it. They know me, know my track record. And so we're going to get that thing finished with construction, fully leased up in about 45 days. Okay, it's going to generate $30,000 a year net. Well, technically 28. That includes vacancy, 28,000. Fully leased, fully occupied. Of course, they're home, so they will be. That's 30. So let's say 28 with a 5% vacancy, okay? Managed by an existing team. Okay, net value creation. It's not $500,000. It's like 450,000. Sure. Okay, minus all of our costs. You see the difference?
Absolutely.
Okay, and I own that 100%, right? Or technically my trust does. So that's why I really, you have to really listen to people when they talk about this business, because most of the time people are not saying very much. It's like, man, why is there so much emphasis around units? Why don't you ever talk about profitability, right?
Well, you know what really gets me is the people who claim their unit numbers from the projects they're passively invested in. You know, I could go invest 25 grand in one of Joe Fairless's 477 apartment, unit buildings and say, oh, I have 477 units.
Yeah. So there has to be, so I'll give you an example. I get approached by people, investors, at least 2 deals a week to co-invest. So I have a criteria. I always send out, I say, hey, look, I look at the deal. I look at the location, make some quick decisions. Yeah, I'm very open to it. This is my criteria, right? And usually that criteria alone I won't hear from them again, just like this deal, didn't hear from them. But one of the criteria is, okay, if we like the deal and preliminarily meets our hurdles, is I want to see your credit report and I want to see your personal financial statement. Because you can tell me you have 2,000 units, but if that doesn't translate into you having good credit, because a bank will ask for that, right? You go to a bank, you get a loan. Those are the first things a bank asks for, right? Credit report and a personal financial statement. Why do you think that is?
Right.
Why? Because your credit report will determine your character, okay, on paper. Pretty good tool, right?
Yeah.
To make a decision whether or not I should be lending this person money at an inexpensive rate of 4%. Your personal financial statement will dictate, other than the words that come out of your mouth, is this someone who's actually created wealth before? Right. Okay, can I trust what's coming out of your mouth based on actually what you've created on paper? Tangible assets? So when people invest with us, one of the things that I do, always, even now, man, I just give them a credit report and my personal financial statement, right?
Sure.
This is who I am on paper, okay? Last credit report was at 833 FICO score. That was from a bank that did a refinance from us. And this is how I built all my wealth, so you can see it. That way I don't need to spend a lot of time selling people on all this fluff, because it's a waste of time. It's a waste of time, man. And the same thing when I venture with people, right? It's like, look, I really appreciate how amazing you are. I get it. You're amazing. And you have 5,000 units and you want me to invest in your project because you have all this experience. That's great. But can you show me a credit report? And can I see your personal financial statement? And the crazy thing is, I usually don't get those items. Why do you think that is?
They're not as great as they're talking up to be.
Yeah. So my point is, there's opportunity out there everywhere. And one of the beauties of this business, okay, and this is why, man, I love the United States, okay, is that people have opposing views and different opinions of how to do things. The same thing. And that's what creates the opportunity. But what I've learned over the years is to not get distracted with volume, focus on profits and things that make sense. And so I've learned to align my lifestyle with how I need to do business to support my lifestyle, right?
Sure.
And that doesn't mean standing on a freaking mountain, man, with a freaking blowhorn and telling everybody all the crazy, right? Hey, I got this, that, the other. It doesn't waste time.
Sure.
What it does mean is, hey, look, let's focus on things that make sense. And for the folks that want to invest with me, I'm fully transparent and I'm willing to show you exactly what I've done and how. And yes, there are thousands of other people out there that have done it better than me, but this is how I've done it. And this is what has created success. And I'm very transparent in talking about that. So.
Absolutely. So it looks like we're getting close to our time. I just wanted to break over to our radio round real quick and just ask a couple questions to help our listeners get to know you a little bit better. First one is, what's your favorite book?
Let me open this up, man. The one that I'm reading right now is How to Own Your Own Mind by Napoleon Hill.
I love
really good book.
Napoleon Hill. Love some Napoleon Hill.
How to own your own mind. Same things that we're talking about, right? How to own your own mind. How to make your own decisions irrespective of all the noise around you. Absolutely. Make decisions around what makes sense, not noise. Sift out the noise and focus on what matters most. So this is a really good book. I really like it. Let's see, Napoleon Hill. What's the next question?
What's your favorite quote?
Let's see. My favorite quote is by Henry Ford. And that is, let me see if I can remember this. This one is my absolute favorite. It is, failure is the opportunity to begin again, this time more intelligently.
Good stuff.
Okay, I love that quote.
And what's your favorite thing to do outside of work?
I'm like a real big family guy. I mean, I have 3 daughters, right? I mean, my kids are all very active. They're very independent. So I spend a lot of time with my family when I'm not working, and very active. This morning, did a beach workout with my 14-year-old and my wife at 6:30, working out, watching the sun come up. And I'm also very active. So right now I'm training for a 48 miler in the Grand Canyon.
Okay.
Should be fun. So I like stuff like that, man. I'm really active. I like the outdoors. I just like challenging myself. I think physical challenges are good. They keep us young and they keep us awake,
Yes. I've done several marathons, and ultra is on my list, but I'm not there right now.
Yeah. So yesterday, the first time I go, man, I was a little drained. I was doing stairs. I did about a mile of stairs on Sunday, and man, my calves were hurting for like 2 days, man. I go, man, and I was still working out in between, right? So yeah, yesterday I felt a little fatigued, but today I feel great. So yeah, man, I love challenges, right? Doesn't matter if it's endurance or I just love challenges, physical challenges. It's great.
Awesome. So how can our listeners find out more about you?
Absolutely. So I think the best way at this point is you can link in with me on LinkedIn. Go to LinkedIn, link in with me on LinkedIn. You can message me if you have questions. For those of you that may have an interest in, you may have a property that you want to discuss venturing on together. LinkedIn is a great way. You can also go to our website at fidelitybps.com or Fidelity Business Partners. There's a number there you can reach out directly to. That's a great way for those that may want to engage with us via podcast. And you want to be on our podcast, you can go to podcast@fidelitybps.com. And so those are 3 ways, right? LinkedIn is a great way. Message us on LinkedIn. Link in with me. Message me. The second way is you can go to our website, connect with us there on our site at fidelitybps.com or fidelitybusinesspartners.com. And third, if you're someone that wants to engage with us via podcast, you can send my team an email at podcast@fidelitybps.com, and they'll send you a link with an application, and you're ready to roll.
Awesome. Well, John, thank you so much for joining the show. I learned a ton. I know our listeners will too. Our mission here is to educate and inspire, and you've undoubtedly done both. So thank you so much, and I look forward to staying in touch with you.
Awesome, man. Thank you. Really honored to be on the show and had a great time.
Thanks for tuning in to the Rent Roll Radio Show, brought to you by Crestworth Capital. We hope you enjoyed the show, and if you did, please hit the subscribe button and leave us a rating and review. You can also visit us at crestworthcapital.com or rentrollradio.com, or follow us on Facebook at Rentroll Radio or at Crestworth Capital. If you would like to reach us, feel free to shoot us an email at info@rentrollradio.com or sterling@crestworthcapital.com. We hope you come back next week to join us on some more of our journey. Until then, happy investing.